Welcome to TradeTheNBA.com. This is John. This reports for the 14th. Well, a little bit of that weakness that we were expecting materialized, but it was minor, and we weren't expecting a whole lot given we weren't seeing a whole lot of short activity from NBI weight here, as well as the constant declining cyan. So it was just a question of whether or not bulls were going to turn up to do anything significant. It did enough to just stabilize things, which obviously is an encouragement, especially with the rising gold shakeout down here. But still, we're in negative shakeout. So getting a little bit of a push. It's pushing up against that 50% again. Nice crossover the pre-market here with the magenta over yellow. So that's a positive indication. Will be enough to push all the way through the 50% mark. Probably going to hit a lot of resistance at that particular stage, but we're not seeing a whole lot of short interest from that standpoint. So it's really just a question of are they able to push through normalized sell configurations within it. And the same thing for the NASDAQ, it's even less short activity. So it's just been a problem for bulls to push together with enough resources. And given what we're seeing from the economic front, if there's generally more weakness, you would expect potentially a stronger move to the upside, as the idea that the Fed will have to soften the situation. But at this particular point, nobody's indicating that, and I think this is pretty clear. I mean, all you do is watch what oil's doing, and you can see that it's continuing to rise. And as long as that's moving higher, the Fed can't really do anything. They're already seeing hotter CPI numbers than that, so that's just a constriction. From a market standpoint now, of course, as inflation rises, you have the dual aspect of the market isn't going to suffer devaluation from that standpoint. So the market tends to creep up a little bit just to counter any devaluation setup that takes place from it. So it's people automatically assume that you're going to get just an immediate dump in things, but no, in fact, the market's not going to accept that kind of deterioration, and particularly since the economy hasn't shown a clear indication that it's stopping at this particular stage, then profits are still being made. So they're going to continue to go. And it becomes an interesting one because when things accelerate quickly from a inflation standpoint, you get an increase in profits. The problem is later in the year when you have to then resupply. That's when you take a hit, and that wouldn't take place until like the first quarter of next year. So there's kind of a time lag between those. From the euro standpoint, they're doing a good job holding it up here. It's kind of a critical zone. Once you start to break down below this 106 range, it really gets tough because that capital flight is a real thing. And with what you see, the yield from U.S. Treasuries versus the ECB, there's no competition whatsoever. So other than the regular activity of Eurozone, do you really want to keep, extended assets there? It becomes a real question, particularly going into winter with the higher oil. Really keeping a lid on the potential for gold here, and it's an interesting one given the fact that we're seeing the higher CPI, oil rising, all those things. Gold should be in tandem with that, and finally we started to see a bifurcation where at least the cryptos are catching a bit of a bid from that as an alternative hedge. So if gold can't do it, you're going to see crypto probably taking on a little bit more added steam. We also see a heightened situation developing within the Russian Ukraine situation, where the British have provided missiles to sink the Russian ships. This is going to only be the potential for escalation. It's going to be really up to the Russians on how they decide they're going to react to these kinds of things. But the further provocation from the West just draws unclear lines as to how things could really escalate. From an ETH standpoint, also still below the 23%, but strong readings from that standpoint. It's just that shakeout deadly. There just isn't that much interest in wanting to build positions from that standpoint. When we look at it from our 50K standpoint, there's a little brief dip, and then here in pre-market, strong above the 50% and pretty solid readings from upside move. Beautiful dip of orange below red DOC, and both red DOC and DOC green rising shakeout, just approaching the positive category here. That could be enough to propel at least to the 100%, if not a breakout move from there. So it's just really going to be a question of do shorts start to activate at any point within this. When we look at it from the 5 minute chart here, we're going to go back into the day. It was pretty back and forth, which is kind of really consistent with S&P behavior. Early morning was the pump. They flipped down, took out all the stops, shot it right back up again to make sure shorts weren't taking a strong stance on it. That got elevated, and then boom, the short set it from there. And then to close out the day, you just bring it right back up to where it all began and then start fresh. And this is what we're seeing in the post market. Cleared out some stops, and now just a super rally going in there. So pretty consistent from a smooth market operation standpoint. So we're not seeing any anomalies from that standpoint. Still plenty of liquidity and everything else going on. As always, though, I'll continue to update you on the Skype chat. We'll leave you with a view of the AI algorithm that's learning different setups and the conversions. You can see it went from the danger zone of magenta and moving up into the green and pushing up from there. So that middle range is a little hard to see right there. That's a dark green color between the 50 and 61%, and then it moves into green from that point above. So just sort of give the visualization on intensity from neutral to then flipping to the more positive. So all in a day's work. As always, trade well. We'll talk to you later.